Good morning, traders. Welcome, welcome. My apologies for running late this morning. Got a little caught up in the shower. All right, well, what do we have here? We have a massive gap to the upside. So the first order for business, always when we have a gap up, is to try to pull back down and fill the gap. It is worth noting that gaps this large often don't fill on the first day. And most of this move was made exactly at 8:30 this morning when the jobs numbers came out. So to my mind, there's basically one of two things that the market will do this morning. It will either rotate up here in the upper end of the range, as it has been since that news came out, or it will try to pull back down to the very least to backfill the single prints. Now, will it get to yesterday's high? I have no idea. But they're either literally right now going to bounce and head back up for the opening price, or we are likely to work our way back down to fill the single prints. It is worth noting, though, that gaps this large often don't fill completely on the first day. So even if it looks like they're heading to fill the gap, it doesn't mean they have to make it all the way to the gap fill. Okay? So looking for a bounce, I would say literally right now. If we're going to get rotation in the upper end of the range, we should be able to pass back through the opening price at 51.47. I'm sorry, the half back at 51.47, and then target the opening price. If we get resistance at the half back at 51.47, we will look for further downside continuation. It is also worth noting that on a longer time frame, so this actually happened sort of at the end of the day yesterday, but the market was building momentum to the downside. Okay, we had these liquidations that took the market lower. We had this massive short covering rally, which should have geared the market up for a bigger move to the downside. But all they got yesterday was a look below that failed and then built momentum up, closing near the highs. The continuation of that in the overnight is a sign of balance. It is a sign that this is a balance area. So if we're able to get back above the opening price, that would be bullish as a breakout of balance. And if we can't, again, this is not necessarily today, but in the days to come, bearish for another pullback. Okay. So let's take it one tick at a time and see what the market has for us this morning. Are we going to chop sideways up here at higher prices, or are we going to try to pull back down and fill those overnight single prints? And so you say to me, Charles, can you explain that in a logical way so that I can understand? If this move to the upside was just an emotional reaction to news, either that will be accepted and the market will stay up here and continue higher, or we will need to take back all of that emotional reaction, which would get us back down to the base of those single prints. And it looks like that's what's happening. That is bearish to see. Okay, so now we're testing the halfback. This should act as resistance if they want to continue the momentum to the downside. If we pass through, which is happening as we speak, we're likely to go test the opening price for resistance there. Good morning to Mr. Ree, Cool Beans, Will, Ships, Vu, Willie T, Malang, Nap, Bust a Move. Nap says we got news in 4 minutes. Kevin is here. Danny, good morning to you. Frito in the house. Jay, thank God it's Friday and the casino is still open for business. Percy, good morning to you. John is here. Debbie B, RK, Tim G, Bernie, Steve Z, Grizzly Bull. RK says, happy shorts fucked Friday. Double top. Yeah, no, I would agree with that. They definitely squeezed some shorts. Nap says, would you say we are in an 8-day balance? I would say that is fair. Let's step out and take a look at the daily. So if you guys remember yesterday, I drew this trend line from the swing low to the low the day before yesterday. And I basically said that trend line would tell the tale. If we broke lower, that could lead to a much bigger pullback. Well, it ended up holding. So that's a sign of balance. So you could look at this as a channel like this, or at this point, depending on what happens today, you could look at it as horizontal balance like that. All right, so now we're testing the opening price for resistance there once again. I would say the ticks have not had a chance to cool off yet. The ticks have not gotten back to the zero line. There is always a high probability when the ticks open, way up here at positive, 1600 because of the gap up. There is always a very high probability those ticks will need to work their way back down to the zero line. There are two ways they can do that. They can either bounce around up here at higher prices long enough for the ticks to get back to the zero line, or they can pull back with price enough to get the ticks back to the zero line. Once they get back to the zero line, we'll have a lot more reliable information. I was just about to say, because any buying before the ticks get back to the zero line is FOMO. Those are traders chasing momentum. And when you think about the market as an adoption curve, and you think, this bell-shaped curve represents everybody that's going to go long, if they're FOMO, We're already running out, right? You need strong hand buyers at the beginning of the cycle to keep the momentum going all day. So passing through the opening price is bullish, but I am cautious, as I feel we could just look above and fail the overnight high. Once that last FOMO buyer runs out. Good morning, Scalping Strategy. Branko says NQ is more bullish, question mark. More bullish? More bullish than a gap and go? Yeah, I mean, this is looking like it's same thing for the NQ in a balancing range. And that looks like a breakout. Breakout! But I say the same thing for the Q that I just said for the ES. If the ticks haven't been able to come back to the zero line, there's still buyers from the overnight that haven't taken profits yet. And so it might need to cool off. I would be looking for support at the overnight high, 17,967, for continuation higher. If there's no support there, if they look above and fail the overnight high, well, then we're going to keep going sideways up here at the upper end of the range until we get back to the zero line. With the ticks. Ken says we still have PMI news today. Well, let's see what happens. We had some news at 9:45. We got some news at 10. But really, what do I care about? You know me, the buyers and the sellers. Can we get above the overnight high? Can we bring in new buyers? Can we let the ticks cool off and get a bounce? That's the information I'm looking for, regardless of why it happens. Khalil says, do you have a video to guide the configuration of market profile on Sierra charts? I do not. But if there's anyone in the community who uses Sierra charts that wants to make a video telling people how to set it up like mine, I would love to do that. I would love to collab. Email me. Frito says, my tick did tag the zero line. Well, because your tick is all... I don't know. Yeah, I trade my ticks. I trade them like I see them. Arjit, good morning to you. Cool Bean says, I'm looking for an excuse to take a day off. I don't know. Today could be a good day, one way or the other. So what you got right now is FOMO buyers, right? They're feeling like they have to get in. Oh my God, the market's going to go to the moon without me. And so that is either going to do one of two things. It is either going to convince the rest of the market they need to join, that we have momentum, in which case we will get a breakout of balance that could lead to a move to the upside, or those FOMO buyers are going to run out and the market's going to pull back down to try to fill the gap. So either of those situations sets us up for a pretty volatile day. And volatility presents opportunity. If you have not yet, please smash that like button. I sure would appreciate it. We got 117 people hanging out, but only 31 likes. The algorithm thinks you guys hate this show. Alta says if we break 5160, what's the next resistance above? That is going to be 67. The base of those single prints down. So I don't necessarily think it's going to go in a straight line like that. Like I said, what will matter is if we can hold the overnight high. That's the first order of business. So if they break above, we want to see them turn that into support. If they can turn it into support, the target is for the market to get to 65. Okay. And then the resistance is going to be somewhere between 67 and 70. But that would truly only be short-term resistance. Because if we can really bring in new buyers up here, we can keep the momentum going as a gap and go. Very hard to trust if they don't let the overnight traders take profits. Let's see what happens. Okay. So we are getting new buying above the overnight high. We still need to come back down and give stronger hands a chance to step in and turn that into good support. But at this point, if they can stay above the opening price, I will be bullish for continuation higher. Now, what you have to understand is there's a lot of risk of a look above and fail here because this is FOMO buying, right? It would almost say there's a 50-50 chance. So when I say I'm bullish above the opening price, I do mean only above the opening price. The second the market pulls back down below that open, all bets are off. It's reversed. It's no longer momentum. It's now looking for a pullback. Okay? So I am bullish, but we must hold 51.54. And there will likely be a lot of grinding up here. Okay? Little pop, little pullback, little pop, little pullback. Can they hold it? And so you say, well, Charles, if there's so much risk of a look above and fail because it's FOMO buying, because these traders are chasing, why would you get bullish? Well, because it is also a gap and go. A gap and go plus a potential breakout of balance just sets you up for quite a move to the upside. So it's almost worth being wrong to have the opportunity. Just in time for the news. This is one of those butt cheek clenching moments. You're right at the overnight high. You got FOMO buying. You haven't give the strong hands a chance to get in, and you're about to get some volatility. Brace yourselves. It's about to get interesting in 2 minutes. I'm watching that Bookmap get darker and darker. Dun dun. Dun dun. Ike says, people will pay thousands for courses out there. I can't wait for the Mastery of Markets and Mind course to start. Excellent reference. Today is the last day for the discount, the early bird discount. So if you're looking to sign up, it's now. Today's the day, baby. All right, so here's the volatility. And yes, I spent thousands and thousands of dollars on courses. But that's why I put it all together and give it to you for a much cheaper price to make it accessible. And it looks like that volatility is to the upside. Boo, boo, boo. All right, so now we are testing the base of those single prints, looking for some resistance here. Jesus Louises. I'm going to hold off on losing my bullishness here just because It is the reaction to the news. Man, look at these bid-ask spreads. Crazy. Bots are at war right now. Okay. There goes the bullishness. We are spending a substantial amount of time below the opening price. That is not bullish to see. That makes this a look above and fail. I hope you took profits at that weak reference, because that may be all we get. That was some insane volatility there, man. Took out 400 stops on the high and then another 800 on the low. Okay, so we're back to playing the tug of war up here in the upper end of that overnight range. Basically, just go back and replay what I said in the first 5 minutes. We're right back there again. So are we going to continue to balance up here, absorbing the momentum from the move up, or do we need to pull back with price? The ticks will tell the tale. We got to bounce on the first test of the zero line. If it breaks now, that's bearish to see. Percy says, I have 5127 and 5153 marked as crucial areas, but I don't remember why. Probably they were previous day's highs, right? $27 and 53. Yeah, 53 was almost a high from 429. There is also a bit of volume there. And 27. Yeah, again, basically a high from 5-1. And at this point, neither of those levels matter. We've been through them. So the high at 27 didn't matter once we opened above it today. The high at 53 didn't matter once we passed through it. Now what matters is the ticks. Now our focus is on one thing and one thing only, which is we created a lot of momentum. We created a lot of excess this morning. Are we going to continue to build on that? Or do we need to pull back and backfill it? And the ticks, they will tell the tale. Right now they're saying balance. It's not perfect taper at the low, but I would consider that reasonably good taper and reasonably good excess. So, yeah, weak high, but good low. I still consider it a bit choppy here. To get bullish, we got to get back above the open. All right, weak high, poor low. Jason says, what about FOMO on shorting the top? Well, there wasn't FOMO on shorting the top. That was just, I don't really have a name for that. That's just like the news bots instantly reacting, doing whatever it is they do. If there's new selling now, right, would those be FOMO sellers? Not if they pull back up into resistance and they sell resistance. So we got a pour low, pour low, weak high, chop, chop, chop. The market will go. Okay. So we're expecting a bounce. If we get resistance either literally right now at 51.45 or up here at the halfback, 51.52, those are not FOMO sellers. They're not chasing the short. They waited for the look above and fail. They were patient. And then they waited for the resistance to get short. That is patience. So it wouldn't be FOMO sellers. They also have the gap fill as a magnet to pull on price. So I'm still neutral. I'm not convinced they're going to win yet, but I'm looking for that resistance. All right, there's repair of the week low. Extremely volatile market. B period completely engulfing the A period. So the next thing I'm looking for is a liquidation break, literally right here, right now. Anybody that was buying, getting squeezed. And it's the same story again. If we liquidate and we just rotate right back up, well, then we're going to get more bounce up here at the upper end of the range. If we liquidate and get new selling again, then that's bearish. Let's see what the Q is up to. Perfectly in step with the ES, Clarice. Yeah, so NQ is looking for resistance at 17,945 or 17,960 for continuation lower. Steven says the ticks went below zero now. Okay, touch zero. Yeah, so now we're playing tug of war. We know we're not going to get the gap and go. They lost that opportunity when they started to spend time below the opening price. So now the question is it just sideways up here at the upper end of the range or a larger pullback? And so far the ticks are not giving it away. one way or t'other. Mark says, fill the gap would be nice, all of it today. It's not impossible, but it is not as statistically likely as us just filling the single prints from the overnight and then bouncing. Just getting down to this area right here and then from there. Now, could we completely fill the gap? Of course. But gaps this large often don't fill on that first day. Although, to be fair, the last time I said that, it did. Which gap was that? This one. This big-ass gap. They filled it. So never say never. And by the way, that would be the same mechanism. We now know that's a balance area low. It was that slingshot mechanism that filled that gap and got a continuation to the opposite end of balance. Well, that could be what would play out today. And then but let's take it one step at a time. RK says 3 ad breaks already. Say it ain't so. Really? Jeez Louise. I wonder if I can... Ooh, I can delay ads. Well, there you go. I'll delay the ads. No ads, guys. The market's too volatile. We can't be distracted. All right, more new selling at the low. I hate having to flip like this, going straight from bullish to bearish, but I'm now bearish. Same exact thing I said before about the opening price, I will now say about the halfback. The ticks are telling us we're building momentum to the downside. The single prints are telling us that the market could easily head down to 51.20 without much support. So I am bearish, but they got to remain below the halfback. If they pass back up through that halfback, all bets are off. And that will adjust as price moves down as well. Cool Bean says, I'm up 420 on the day. I will take that as a sign to take the rest of the day off and smoke some bowls. Enjoy your weekend. Cool Beans. Ike says the NQ is holding the VWAP. Holding it as resistance. Oh, I think that's what you meant. John says, do you hopefully make money off the ads? I do make money off the ads. If I stream for about 3 or 4 hours, I will probably make about $4. So, you know. Willie T says that is a monster B period. Yes, sir. I agree. Just like yesterday. Yesterday had a monster initial bounce. And they're doing it again today. I would just say in general, the markets are very volatile right now. You can see that quite easily looking at the candlesticks. Just look at the size of these candles compared to the size of these candles. I mean, every day, massive, huge ranges. Up here too. It's volatile. That's the thing about, bullish momentum versus sort of sideways neutral momentum. In this market, they just had to keep buying dips and just keep convincing more people. Now you got half the people thinking it's going to go up, half thinking it's going to go down. So there's just a lot more violent tug of war. Speaking of which, man, look at that resistance on the daily. I didn't even notice that. Almost to a tick, that trend line from the highs. Danny says, so when we have a big initial balance, do we treat it like a daily range and play the trends inside it? Yes. So if, let's say, hypothetically, the market were to reverse here, somewhere between where price currently is, 51.29 and 51.18, right? In the next 4 minutes before we print the C period. And then the C period were to turn around and start going back up. And then the D period were to print. And the D period were to make higher highs, but not break the C period low. I would not be looking for shorts. I'd be looking for longs with the momentum intraday. However, that being said, right now the momentum is down and we're 4 minutes from printing the C period. So more likely the C period breaks the B period low. We'll just have to wait and see. Jason says, I'll send you $5 to cover no ads. You're welcome, chat. Jason, if you send me $5, the next time I go live on the public YouTube, I'll do it with no ads. Okay, so no resistance at the A period low. We're now looking for the sellers to step in somewhere between right where price currently is now and 51.45. You can see this area was where the market played tug of war in the overnight. It's where it played tug of war before the most recent break lower. So if the sellers are going to remain in control, they got to smack the market down right here, right now. Oops. Oh, fuck. Jay says, what's up with the Viagra ads, Charles? Jay, you do know the ads are made for you based on your search history. So, Jay, what's up with the Viagra ads? Angelino says, my favorite setup is the gap up with the follow through that breaks the overnight high and then breaks down below one standard deviation, full session VWAP with a stop above the high of the day. Big stop. So passed. Yeah, you could do that. You could definitely always take, it doesn't even necessarily have to be a gap, but if the market looks above a high, any high, could be the previous day's high, could be an overnight high, could even be at the high of a previous TPO, whatever, and it fails and it pulls back down, you can always short and use the current high as your high. As your stop. But if I'd have done that today, if I'd have shorted the look above and fail, which of course you would have had to have done in a fraction of a second because it happened so fast. But if you had like a limit sell order just sitting in there waiting, or stop sell order, the market went up, it came back down, it filled your order, your stop was up here. Once the market broke back down lower, you easily could move your stop below the opening price. So obviously you can't enter short here with a stop below the opening price now. But if you were in the trade from up here, that would have been acceptable in my mind. But again, if you didn't take that trade, I wouldn't worry about it. That was crazy. That should happen in like 2 seconds. Okay, second poor low of the day. So same as the previous, we are looking for a bounce up into resistance, likely somewhere here around 35, 36, and then another move to repair that poor low. Once they repair the poor low, it is trending lower, which is bearish to see. One-Eyed Willie says, well, that explains what my wife is using the computer for when I'm not home. Wait, are we back to the Viagra thing? Are you saying your wife is slipping you boner pills in your food? Oh man, check this out. Collector says, you guys, major world update. The stock market is going to break new record high. It's time to buy all the stocks. Well, you heard it here first, folks. Get out there and buy all the stocks. Angelino says, got burned twice recently, banking on poor highs getting taken out. So frustrating, but bound to happen every once in a while. Yeah, there's no guarantee that a poor high will be repaired. You always have to take it into context. But I would say if you just grabbed a piece of paper and put it on your desk, and every time the market made a poor high or a poor low, you just wrote it down on the piece of paper, 1036, market makes a poor low in C period. Just write it down. And then every time it's repaired, go back and cross it out. And every time it's not repaired, leave it there. And just look at your piece of paper in 2 weeks. And you will see that a majority of those poor references will be taken out. Now, where it gets tricky is they don't have to be immediately taken out. So it's not like you could say, oh, okay, we created a poor low in C period. I'm just going to blindly short right now because it doesn't have to repair right now. It might come back in 2 hours, right? It might bounce all the way back up, and look above the overnight high again and then come back down for it. So it's always just one piece of data to take into consideration. If you're already looking to short resistance, it might increase your odds of wanting to get short. If you were short, from a higher level and the market creates that poor low and it starts to bounce, you might think, let me jump out of my trade right now. We're probably going to get a pullback. So the poor low or the poor high is an incredibly valuable signal. It just doesn't always work, and it doesn't always work right away. So it must, like everything else, just be one piece of data. Where traders get screwed is when they want one single thing to tell them to get into trades. Like, oh, the market did that, I get in a trade. The market did this, I get in a trade. The best setups for me, the ones that have the most consistency of making money over time, are setups where there are multiple confluences all working together and low risk opportunities to get short, right? But sometimes you got to wait. You got to be patient, waiting for those perfect setups to come. And that's the hard part. All of this and more in my Mastery of Markets and Minds workshop. There is a link in the chat. It's pinned to the top. Check it out. Today's last day for the early bird special. Workshop starts in a week and a day. A trading week in a day. You see, this is why the brigade exists. Willie T, back the truck up. QE underway for the elections. Jay, I would back the truck up, but gas is too expensive. Beautiful. Angelino says, it seems as though in uptrends, poor lows get left behind more often, and downtrends, poor highs get left behind more often. Yeah, I could get behind that. There's also, I don't really know a great way to explain this, but there are times where the markets seem to be more bot driven. And I mean over a period of weeks, where it's like there's just lots and lots of intraday bots that are causing the reversals. And when that's happening, which has not been the case the last few weeks, but prior to that it was, you get a lot of poor highs and poor lows that get left behind because every reference is weak or poor. Like literally every reversal is at an exact level. That's what was happening. You know, looking at the daily chart, that's what was happening a lot up in here. There were just tons and tons of poor and weak references everywhere, every single reversal. But now that the momentum rolled over, it's gone back to normal. The market is always changing. Son of a gun. Danny says, what am I covering on the first day? Is there a syllabus? Not exactly. Kind of. So if you go to the website, markersmind.com, you click over here, you click on workshop, and you scroll down. This is the syllabus of each day, but it's really just sort of the title of that day session. It doesn't go over the specifics of what we talk about. But the first day is the tools. So that's where I teach market profile, bookmap, internals. That's an important one to start with because then you understand the context when I reference these things throughout the rest of the course. Every other day is a self-contained lesson. So you could watch them at any time in any order. But day 2 is the path to profitability. That's just how you conduct yourself as a person to be a professional trader. Thinking in probabilities is just learning to think like a casino, not like a gambler. The two-way auction process is understanding how the market moves through a two-way auction process over a longer time period. But weakness, trends, and rotation is basically the same thing, but over a shorter intraday period. Developing edge and trading setups teaches you how to, strengthen your edge, improve over time, figure out what's working, what's not, and make adjustments. And of course, I teach my trading setups, how I got to them, how I created them, and what they are. The next day is technical versus emotional problems. That teaches you how to differentiate between why didn't this trade work? Did this trade not work because I misread the chart? Did this trade, not work because the technical signal I'm using doesn't work anymore? Or did this trade not work because I was feeling emotional and my emotions caused me to misread the situation? And then day 8 is habits and routine, basically how to build your life around being a more successful trader. Day 9 is mindset. And then day 10, we review everything again to kind of really drill it in and answer all the questions and stuff like that. I would describe it as all encompassing. Okay, moment of truth. As I've said, they've got to stay below the halfback to keep this momentum going lower. So it's now or never for these sellers. If the market pushes up through the halfback once again, I will be neutral. I would say bigger picture, I would still be bearish to come back for that poor low. But if they pass through the halfback now, if they pass through 51.47, they're going to need to go sideways for a while first. Ike says, I believe pirate traders will agree with me that successful trading lies in risk management. Taking likened to the infinity pool, trading likened to the infinity pool as suggested by others. I don't know what the infinity pool is, but yes, it's all about risk management. New traders often think being successful as a trader is about being right. If I can just be right all the time, I'll make money. But you will never be right all the time. No one is. The greatest traders on earth have drawdowns. Period. Everyone does. And sometimes those are because of changes in the market. The market's behaviors change. And if you can't change with them in real time, then you can't keep up and you'll have drawdowns. Or sometimes it's emotional. Sometimes you got something going on in your life. It might have something to do with trading. You took on a loss the previous day or whatever the case may be. Or it could have nothing to do with trading. It could be, you got in a fight with your partner that night or something like that. And that affects your trading the next day. And so everyone has losing days. Everyone has times they're wrong. The way you be a consistently successful trader is by managing your risk so that when you are wrong, you lose much less money than when you are right. And it's not complicated. It just takes discipline. This is a perfect example of it right now. So if when the market made the poor low in the C period, you were flat and you were feeling bearish and you were like, oh man, the market's going to take out that poor low. I want to get short. There was all the reason in the world to. The market had momentum to the downside. We have a gap that needs filling. At the time, the ticks were below the zero line. Everything looked really bearish. But to enter the trade down there would have been a bad idea because where would you put your stop? You'd have to take a massive amount of risk on. So if you just had a rule for yourself where you only wait until there's much less risk compared to the potential reward, one simple rule, it's the same idea, right? That you see an opportunity to get short to repair a poor high, but instead you wait for the market to pull back up where you can get in with much less risk and a much larger reward, you'll have a better chance of making money. Not because today it will work. Not because this particular trade is guaranteed to come and take out the poor low. But because day in and day out, if you trade like that, if you wait for the larger pullback, sometimes you will miss trades, right? There's certainly a chance it could have just bounced right away. It could have gone boop, boop, and immediately taken out the low and liquidated much lower. But I would rather miss that to wait for the better setup, the setup with less risk, because over a series of over 20 trades, 30 trades, 40 trades, 50 trades, I can't control the outcome of how many of those trades will go back and repair that poor low. That I cannot control. But I can control whether I'm risking less than my potential reward. And if that is the case, I only got to be right like 40% of the time and I'm profitable. So the hard part is the discipline. The hard part is the not FOMO, the not chase, the not force, the not get upset if the market comes close to your entry but doesn't quite get there and then goes without you. It's controlling those emotions that will allow you to consistently make money over time. Way more so than being right, which is totally random. Ike, infinity pool equals no edge. Oh, I get it. Infinity pool. That's good. David says, what is your take on the ARMS index, the TRIN? I looked at it for a while and I just found it to be unnecessary. It's basically the same thing as the ticks. So I just I've spent a while, a couple months, keeping it up on the chart every day and watching it. And I just felt like it was taking up, unnecessary bandwidth in my brain. I can see that instant momentum in the ticks. Too much can work against you, right? If you're looking at too many different signals at the same time, it makes it harder for your brain to process the information. So I try to limit it as much as I can. Danny says, what about the VIX? I don't look at the VIX. I'm not saying there's anything wrong with you looking at the VIX. It's just not something that I use. All right, so if you chose to short the resistance level because you were looking for the repair of that poor low, so if you shorted somewhere up here near the C period high, okay, with the slowing of the tempo and the fact that we're about to print the D period, there'd be nothing wrong with moving your stop below your entry. Once we print the D period in 3 minutes here, the market should work its way down to that low if the momentum is going to continue. If they're going to keep taking the market lower, that D period print should be the beginning of that move. So once they print the D period, if it comes back up through the C period high, well, then the momentum is over and we're going sideways for a while. So if I was you and I was shorting up here, I'd be moving my stop below my entry as tempo has slowed right before a new TPO. I'm not telling you what to do, just telling you what I would do. Willie T says, what constitutes a repair of a weak low that we are approaching? So the poor low on the downside would require the market to go 1 point below it. So it would have to pass through. Boop, by 1 point. And then it's repaired. So you think about it like it's a magnet, right? Like there's a magnetic tug on the market, pulling at the market. But the second that it passes through, boop, boop, that magnet is gone. And it doesn't matter anymore. Now, I will just say, in terms of that repair, I 100% still believe it will happen. But the tempo is working against us here. So early on in the morning, the market was moving very quickly. There was a lot of emotion, forcing people to take trades. Well, now that has cooled off, and the market is going very slow. So that is actually sort of increasing the odds that the market needs to go sideways for a little bit, that it needs to balance. Now, I do still think at some point we're coming back for that poor low, but they need to do it now if they want to start, trending to the downside. If they want to get the excitement going again, they want to start squeezing buyers and bringing in FOMO sellers and get that momentum going. They got to do it. They got to do it now. Speaking of doing it, they just pulled the fairest price to do business lower, which is bearish to see. And they pulled the value area against the low of the day, which is also bearish to see. Any questions for me from the chat? Jay says the NQ is holding its VWAP. Holding its VWAP. Yeah, I think it's just passing through it again and again. Yeah, so NQ not quite as bearish as the ES, but it is still bearish. Why is it not quite as bearish? Well, they have a weak low in the D period, but otherwise they have good excess at the low. So that actually means the higher probability is sideways than lower. And also they barely dipped into those single prints from the overnight range. Look at that. Look at where the time is being spent. Right? So you got all these TPOs overlapping right here. That's where the time is being spent. And look at where that is. As soon as they dipped into those single prints, they ran out of steam and reversed. So it's still bearish, but it's less bearish. There's not quite as much bearish momentum in the Q. And there's your repair, your weak low on the Q. And there's your poor low on the ES. Willie T says 1 point is 4 ticks. Yes, sir. 4 ticks. My chart is in 2 tick increments, so it's 2 letters. Okay, there's the repair of the poor low. The market is now 1 time framing to the downside, which increases the odds that they are going to continue with momentum to the downside. As long as they stay below, ironically, it's the exact level I have marked right now, as long as they stay below this C period high. If the market comes back up through that C period high, then it is going to go sideways. Okay? That being said, if you wanted to have another way to look at the market, I would say look at this node right here around 51.34, where we just played all this tug of war. If the market is going to continue lower, that should hold as resistance. Because again, it's about momentum. We had tons of momentum first thing, and now it's running out. So if they want to keep this thing trending, they got to get that momentum going. Got to pick up that tempo. Got to start squeezing some people. Any other questions for the pirate? While we watch the slow melt to the downside. All right, guys. Well, you heard it here first. This tempo change means they are not going to get that momentum build to the downside. That is more neutral to see. The market remains one time framing lower as long as the market stays below the previous TPO, which does increase the odds that the move will be to the downside. We also have the value area very low on the day's range and that unfilled gap tugging on price. All of that is bearish to see. But we will be printing a new TPO here in about 6 minutes. And if they don't get to the lows before that, it'll get cessation. And then we'll be going sideways for a while. So if you're a seller, stay in your short. The higher probability is still continuation lower. But I wouldn't be looking to enter a short anymore. The change in tempo, the change in volatility is a change in the market. And it's telling us the market wants to go sideways for a bit. Jason asks, if we get the workshop and we work and can't watch it live, do we have to wait till the end of the workshop to get the recordings? So they're not available same day, but they're available the next day. So like each day I upload the previous day's lesson. And you can watch them as much as you want afterward. Frito says 36 is make or break. If you're talking about for momentum to the downside, I disagree, right? The fairest price to do business is at 38. So there's no reason why the market can't continue to go lower. None at all. But to me, it's about time. It's about tempo. The more time we spend not going lower, the more likely we need a pullback to the upside before we do. Remember, these are volatile markets. So you got to always add a little extra space to any idea that you have. Any other questions from the chat? We got 123 people hanging out, nothing to talk about. I got to get a few more likes. Ask me a good question so I say something smart. Frito says, any opinions on gluten-free bread? Yeah, it tastes like cardboard. That's my opinion. Now, if you've got a gluten intolerance, if you've got celiac disease, well, then you do what you got to do. But if you don't, why torture yourself? That's what I say. John says, the sum of the square root of any two sides of an isosceles triangle is equal to the square root of the... I have no idea. That's not going to help me sound smart. I'm not even sure what half those words mean. Two minutes to E period. All right, here we go. Printing the E period. We are right at the D period high. And the fairest price to do business in the middle of the range. So it is now or never for these sellers. If we get cessation of the trend, if the market is able to get a point above the D period high, it will increase the odds we're going sideways for a while. It will also be a little tiny bit bullish to see on a longer time frame as a gap and go, but nothing to think about intraday. But if the sellers slap the market down once again, they have a chance to try to squeeze the buyers. Watching those ticks. And so you say, Charles, why don't you just give up on the momentum to the downside? The tempo has changed. The internals don't look bearish. And you are right at that D period high. Well, because of those day trading bots. A lot of times they want to wait until they get right to that TPO high before they smack the market down. So I'm willing to wait it out. Nope. All right. The market is rotational. Both ES and NQ, increasing the odds that we are going sideways for a few hours. As far as how I would handle this balance to the side, as always, I would be looking for opportunities to go short above the fair price and go long below it, targeting rotations back to it. I would be much more cautious shorting near the highs. If the market is able to get above the overnight high once again, above, we'll call it 50, 51, 58, that could potentially bring in new buying up there, right? Because of the gap and go on a day time frame. If the intraday traders can get up there and they can start to spend some time and start to bring in some volume up there, they can absolutely break the market higher. Okay? So if I was looking for the market to sell off and come back to the POC, I'd want it to stay below that overnight high. Willie T says, it seems like momentum is picking up a bit and shifting to the upside. That is not new buyer momentum. That is squeezing seller momentum, right? Any sellers that were shorting the D period had their stops above that D period high. So once it got up there, boop, 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 it starts to build momentum up. But that doesn't necessarily mean it's going to go straight to the moon, you know? It just means it's done going down, not that it has to go up. It'll be interesting to see what happens with this node of liquidity at 5150. Does that act as resistance when the market pushes up into it? Or does that disappear? Any final questions for me before I say goodbye? I got 80 likes. I appreciate you if you hit that thumbs up button. If you didn't, that's okay. I still appreciate you, just not as much as the people that did. Any final questions from me? All right, guys, enjoy the sideways market. As I said, if they start to build up support above 57, then you can start to feel a little bullish. Otherwise, in my mind, the higher probability is they'll take it up and bring it down and take it down and bring it up and take it up and bring it down and bring it down, take it up. Bulls markets. Have a good one. Bye.